What's going on, Money Morning Live? Isn't it always nice to hang out with 8 Ball here in the main room? I always enjoyed the show, but right now we're switching it. We're flipping the script and we're bringing in Tom Gentile with Power Profit Trades. And I'm telling you, we're talking a lot about crypto today. So get ready. We're coming in 5, 4, 3, 2.
Good morning, Money Morning Live, and also my YouTube followers. Glad to have you here. Tom Gentile. Monday, last day in January 31st, 2022. Again, glad to have you guys here. It is Microcurrency Monday for Power Profit Trades. So today, I want to take a look at digital asset space as we do every Monday. I'm looking at some stabilization here. I'm just been looking at my charts, and we're starting to see perhaps that next bottom that has formed. Definitely looks better now than it did this time last week. There's a big op-ed story comparing crypto to subprime. It's been getting a lot of attention. Going to talk about that too. Your questions, my answers, we're going to pull those right from the chat. We'll look at those in both Money Morning Live and on the YouTube stream. So get your questions in. Let's get started with the market update. Before I begin even further, Eric, how was your weekend?
Thanks for thinking of me, Tom. The weekend was great. Family stuff. Got to get away from the computer for a little bit. How about yours?
Yeah, me too, man. I helped move my boys into their first house. So I play moving man. I mean, I never realized how heavy a convertible couch, the couch with the pull-out bed, is.
God, it's a couch and a bed. Fun. You got 2 in 1, man. Of course it's heavy.
I mean, you know what? I'm always taking a story and somehow spinning it into the markets or spinning it into cryptocurrency. And here I am trying to get this couch, which weighs hundreds of pounds, by myself. And so I'm trying to get it on a dolly so I can wheel it out to the truck as I'm waiting for my kids to get up because they're always late. And so I use one of those dollies to prop it up, shove something underneath. Anyway, here I am thinking about the power of leverage and how it's going to help me save my back. And so that's what I ended up doing, man.
That was
my weekend.
Smart.
So much. And I got to tell you, that's my exercise. That was my exercise for the weekend too. So let's get into cryptocurrency and let's talk about what's going on. So major digital assets, guys, had a great recovery last week. We've just seen in the last 7 days, I'm going to bring up a price of BTC over here on the left-hand side of my screen. And I'm pulling this from FTX. So you can see this was 7 days ago. Here we were talking when we saw that big drop down the weekend prior, and we dropped all the way down to below 33,000. And that was on January 24th, right? Then we started to get that big push higher. And by the time we got into just a couple of days later, we had a big pop up to, it was almost 39,000 before pulling back. But we're creating what I believe is this higher low, higher high scenario. Now, this is only a week, right? Because I got to show you what this looks like when we put it into a longer term perspective, all right? So last 7 days, got that, right now we're looking at about 37,980. So we're knocking on the 38,000 door. Over the weekend, we were at 38.5. And we'll see where that ends up going. A lot of this move this morning is in line with what's happening with the stock market. Stock market opened mixed this morning, and then all the buyers started rushing in and pushing tech stocks higher. So when tech stocks go higher, that's actually been good news for Bitcoin and cryptocurrencies. So that's the first thing I want to show you. And we'll get to a chart of BTC here, and I'm going to actually pull that up in just a second here as well. Fibonacci levels. So longer term chart of BTC. Yes, the last 7 days we've seen move higher. But what about the last couple months? That high that we had back there at the beginning of November, well, that was the all-time high set at 67,549. We pretty much dropped all the way in to a little more than a week ago when we saw closing lows come in just above 35,000. So 67.5 to 35,000. Count that little wick that came down, and we did get a 50% pullback off the most recent highs. Believe it or not, and I got to put this out here, I know I'm going to get some pushback from it, but we've seen it before, guys. believe it or not, this is actually healthy. This is healthy for digital assets. This is healthy for any environment when something goes ahead too far too fast. My outlook last year was coming before we hit 67.5. My outlook was around 50,000, and so we pushed through that quite quickly. And so we were expecting some pullback, right? I don't think I was expecting 35,000. I was really seeing the pullback coming into 40. And that's where I started buying Bitcoin at 40. You guys all know I made a big purchase a little bit more than a week ago. And I believe that was around 38,600. And so, yeah, so we rang the register, guys, and we're just about back. We're real close to getting back to at least for me, to my break even on my last purchase. We'll see where it goes from there. But I feel pretty good about where we are right now, forming this bottom, and kind of we did have several days where we moved up. Okay, over the weekend we had a little bit of a pullback, not much. Again, we'll see where these end up going. Let's move to Ethereum. And so ETH, again, back at the highs of, if you take a look at the highs that occurred in the first week of November, we were sitting above 4,800. The lows came in a little more than a week ago, closing low at 2412, and we hit that. We really stuck that for a good 7 days. We got some push up late last week, and that pushed us off of those lows at around 2400. Right now, close to 2600. So we're getting a good 5%, 7.5% up off those lows. Hopefully that stays as well. If you take a look at Bitcoin and Ethereum, believe it or not, off the lows, Bitcoin is the stronger asset right now. So Bitcoin's become the engine. Ethereum has become the caboose in technical terms. What does that mean? I think we'll see, if we continue to see Bitcoin move higher off of these levels, Ethereum will play catch up, and Ethereum will become the stronger suited coin if we see, again, continued moves to the upside. So that's what I'm seeing. Where do we see these going? All right. So let me back up to Bitcoin one more time. Let's zoom in. And what I'm looking at is that first Fibonacci level right there, 47,480. That's what we're looking at. We did close above the 10-day moving average. We discussed that last week. Now we're looking at that 30-day moving average, which is, I really got to say, it's sitting somewhere around the low 40s. Let's call that 42,000. So that's the next area, and then 47 after that, right? Hard to believe that just a few months ago we were sitting at 67,549, and hard to believe that just last week we were on those lows. But again, guys, I'm showing you these on a weekly basis. I want you to think in terms of Bitcoin and Ethereum and maybe a couple of others. You got to think out longer term, right? With Ethereum, the levels we're looking at, 3328 is that level on Ethereum that we're looking at. And I would say 3,000 is going to be the level when we hit the 30-day moving average. So those are my next targets for Bitcoin and Ethereum. Let's take a look at a couple more, Eric, while we're on the subject. Cardano. All right, hadn't talked about that one in a couple of weeks, but actually, no, I think we did. So Cardano, if you go back to the beginning of November, was at $2.30. On the pullback, I'm looking at this, and I'm in this in around 2. And of course, here we are sitting just above $1. Now, last week we were discussing why this was a great area. We actually had a darknet signal recently just around that level, and that's where we are right now. And this seems to be sticking very, very well amongst the levels of about $1 to $1.10. This is a great area to add into. And again, if you're looking for a longer term coin, which actually has a good story behind it, Cardano is something to pay close attention to for those of you that are long gamers out there looking for something that you're planning on sitting on for more than just a few weeks or a few months. So that's Cardano. Where's Cardano going? I see Cardano's first stop at $1.50, and I didn't just pick that out of thin air. What we're doing is we're looking at right here, guys. We're looking at the high in November, all right? And we're seeing the lows that are happening right now. $1.50 is the first stop on the bump up before we hit Fibonacci resistance, all right? That's also, I think, a great area to even pull back a little bit if you're a trader in Cardano, all right? If you're a buy and hold in Cardano, these right here really don't mean anything to you. But if you are trading Cardano, maybe you can do both. I hear a lot of people saying, Don't trade crypto, just buy and hold, okay? And to that I say, why not do both, all right? Why not be a buyer and a holder of the long term? I am, all right? But why not also look at the income side of this? And so, one of the things that I like to look at is if you take it, for instance, Cardano for a moment. Let's say we're all able to, at the present level, buy this around $1, right? And we've got some we bought at $1 to buy and hold, and we got some we bought at $1 to scale out of. Maybe scale out of a little bit at $1.50, take some profits, scale out of a little bit more when we get to 2, take some profits. And yet now what you've done is you've taken some income, you've still got your buy and hold stash, or what we do with microcurrencies. One of the things that I like to do with microcurrencies is when I hit some levels in the smaller altcoins, I'll take those off for profits, and then I use that as kind of a drip method of buying the longer term coins like the Bitcoins, Ethereums, and Cardanos. Lastly, let's take a look at a crypto related stock. So I scan, I think it's about 3 dozen stocks out there that are tied in one point or another to cryptocurrency. Some of those are flat out Bitcoin mining stocks like Riot Blockchain. Some of them are exchange-based stocks like Coinbase. And then there are some like the financial side, and in this case, the commerce side, which is MasterCard. So a lot of you might say, MasterCard's got nothing to do with cryptocurrency. MasterCard is like Ford, all right? How Ford Motor Company came to the electric car company a bit late. If you want to call Tesla the innovator, Ford is the copycat. MasterCard's doing the same thing with cryptocurrency. MasterCard came to the table late. Why? Because as a smart business, they held back and decided, is this going to be a hobby, or is this going to be something that everyone's going to start to embrace? And as more and more people embrace it, and they see now that there are ETFs and there are institutions getting involved, MasterCard said, hey, wait, I want a piece of that action too. So MasterCard, what separates it from every other cryptocurrency stock that I'm looking at out there, it is sitting on highs for the year, all right? And I'm not talking just about the month of January. I'm talking about, go back several months and you'll see that the chart in MasterCard had some very, very nice resistance here at 370. Well, it poked above that right before it released dividends. That was back at the beginning of the month. Had a little bit of a pullback with the market, but then really rallied out the gate. And it took the stock went from around 340 in a week, 340 to 385. Big move. Strength begets strength. And I like MasterCard on the chart as the strongest crypto stock, Eric. So, when you kind of put everything together, and for those of you that are members of our microcurrency trader, a couple of other positions I'll just kind of reiterate. Polygon, outperforming. That was one of our top performing picks in the portfolio when I was gathering notes here for the show. Kyber Network, all right. That was a little pick we did back in June. That's also edging up in the green. And of course, our subscribers, we added Cardano when it was on sale last week too. So again, we looked at Cardano, and this one still looks good. We'll have, like I said, for those of you microcurrency traders, we'll be updating our sell points on Cardano and all of our small coins. And you'll hear about those as well as what's on the watch list coming forward for this week. All right. So that we plan on getting out to all of you microcurrency traders. If you're a lifetime trader, however, you know where to go. All right. All you have to do, look at this. I'm seeing all these things popping up on my screen. Up 5%, up 5%. I'm getting price alerts right now from Coinbase, but that's not the app I want to go to. The app I want to go to is the microcurrency app, which is showing me all this cheddar right here on the screen. And those of you that are lifetime members of microcurrency, you got the app. All right, we bonus in a year of software, which includes our app as part of the microcurrency trader lifetime membership. So, Eric, let's pop into some headlines. What's been happening, all things crypto?
Yes, let's do that. So we're going to head on over, and I have quite a few for you, Tom, starting with this one.
Eric, did I lose you?
No, I'm here. Can you hear me, Tom?
There you are.
Yeah.
Try that again.
So we got this Paul Krugman says that crypto has disturbing parallels with subprime mortgage meltdown. What's this all about?
Yeah, so I find that interesting, and most importantly, you showed in the headline there, Nobel. It says Paul Krugman has disturbing parallels with subprime mortgage. Now, again, everybody's got their take on this. So, do you want my take on this, Eric?
Well, of course, Tom, you're the expert here today, man. We
I
want your
mean,
take.
let's just read the quote that throw that quote up there that starts with "Unfortunately, that's not what's happening." If you ask me regularly.
Yes, got you right here.
Yeah,
Unfortunately, that's not what is happening.
Yes. Yeah, and if you ask me, regulators have made some mistakes on what they made with subprime. They failed to protect the public against financial products nobody understood, and many vulnerable families end up paying the price. Please, my goodness. I mean, smart man, got a lot more money than I do, but I think his head's in the wrong place on this one, Eric. I'll tell you why. How many people do you think were in the subprime market or in the crypto space right now? Please tell me. How many?
How many people are in the crypto space right now?
I mean, think about this for a second. If you were getting a subprime mortgage rate, you were probably back. I mean, you go back 10, 15 years, you were getting mortgages based on stated income that you probably didn't make in the first place because a lot of the brokers out there saying, well, just tell us what you made. We're not going to check. Did you make $100,000 or $200,000 or $500,000 a year? And the guy says, yeah, even though maybe he was making 30 or 50. You think that's the guy that's in cryptocurrency right now? Because I don't. All right. I don't think that. There is only 10% of the population out there that's really involved in cryptocurrency. This is not the same 10% that was involved in the subprime markets 10 and 15 years ago. All right. So the demographic is a complete 180. That's what I think. I mean, you know what? Yeah, I guess you could argue the point. There's a few numbers that compare when you look at scale, but the problem is that it's the wrong group of people, Eric. And so, Krugman's looking at the crypto market and he's saying, oh, it wiped out $1.3 trillion from the highs that we talked about back at the beginning of November. Yeah, you know what? It wiped out before. It wiped out back in 2014. It wiped back in 2017, 18. And it's doing it again now. That's called a market, right? And so, throw the chart up if you haven't already, Eric, of the
Market.
the scale chart. So, you got a value there. You got kind of a peak value there. If you guys can see that on the screen, okay. So we're showing November 10th's peak value, all right, just over 3 trillion. All right. So I want you to go back. Now, you see the flat line across the bottom. All right. That's kind of hard to distinguish because back then, before 2017, there was just a handful of cryptocurrencies out there. So when we hit 2017, 2018, two things happened. One, crypto came back in a big way. And with it came not just Bitcoin, but Ethereum, Litecoin, Ripple. There was about a good 10 or 12 of them. And then there was a lot of the small altcoins kind of showing up. But they didn't amount to much. Then you had the 2017, 2018 highs when we were not even at $1 trillion. We hit the trillion mark in 2020. We hit the 2 trillion mark in 2021. And we hit the 3 trillion mark area at the end of 2021. In the last two peaks, the peak where we went to 2.5 trillion, over 2.5 trillion, we almost wiped off of half of that. Where was Paul Krugman when that happened? He wasn't talking about it then. And he wasn't talking about the move that took us from about 1.3 trillion to 3 trillion. So now he's talking about it. You know why? He's talking about it like everybody else, because it's something to talk about now where it wasn't when none of these guys were looking at crypto, when only the folks that were in it early were looking at it. That's when they were looking at this. I think this is just another one of those higher low, higher high scenarios. And this chart, because it's a scrunched together chart, Eric, it doesn't look that much different than Bitcoin or Ethereum.
Yeah,
so
this is
that's
true.
my thought.
I like how you broke that down.
And the other thing I want to mention too is that I want everybody to think about their own position for a second. Okay, So you, as your own money manager or investor, you're the one who knows how to position and how to navigate this kind of volatility. I mean, we're talking about, for me, I have a different, a different position. I have my own situations. I have money earmarked in private investments. I have money marked in real estate, in stocks, in options, in crypto. I don't have every penny on this planet in cryptocurrency. And I wouldn't suggest anybody do that. In fact, if I look across my entire spectrum of assets that I'm invested in, crypto is by far the most volatile. So therefore, I want to allocate the least to that because it has the most volatility. It's also going to go like crazy to the upside as well as pull back. And we've seen that happen just in the last 3 months. So I want you to think about that. All right. To me, this is more speculative. I don't go all in. You shouldn't go all in. And also, you want to keep in mind that, for me, as we get signals, as we get trading alerts, those of you who are microcurrency traders, we get those. We don't get every single cryptocurrency and we buy it all on one day. No, it's all spread out based on a couple of things. The biggest thing is it's based on our artificial intelligence telling us exactly when a pattern is setting up. In fact, Eric, when I was actually looking this weekend, because I do this every month. I look at what the market did for the entire month of January. Okay, yes. What did cryptocurrency do? Well, we saw it. It fell. Okay, as a whole, not every altcoin, but the major ones did. Right? How about the stock market? Well, it fell a lot too. It's had a lot of volatility too. And then I start looking at my trading strategies, and I start looking at even trading strategies on a research service. So let me give you one. Surge Strike. Surge Strike clocked in a 90% win rate in January. Why? Why? Because it's based on the stock market? No, because it's based on volatility and trading volatility. And so by trading volatility, that has outperformed practically everything. And you know what? I'll get into that a little bit more tomorrow around 11:30. We'll do a whole hour based on that. But I just thought I'd let everybody know, when it comes to me, I like to be, and I want you to be this. I want you to be a jack of all strategies, and I want you to be a master of a few. Don't be a master of one, because if you're a master of one, you miss out on what's going on to the left and to the right, okay? And also by being a master of a few, you're going to allocate into different areas. So as you develop your portfolio and you add more strategies and asset classes, you're able to kind of flex your muscles a little bit more. And if you have an asset, like in this case, crypto, I look back at crypto and I'm like, let me bring that chart back up here again. This is a long-term chart. And you go back here and you see, all right, so at the beginning of January, we were trading around 42,000 on crypto, and it went up to 45, and then it dropped down to 32, and now we're at 35. So yes, it's down for the month of January. It's down about 20%. All right, you take $8,000 off 42, $7,000 off 42. You're around the 17, 18% drop. But there are other areas that outperform during that drop. Let's see. How about another one? I know you have something from Blankfine, right? Another quote?
Yes, we do right here. We have a prediction right here made by Lloyd. It says, "Look, my view of it is evolving. I can predict the future, but I think it's a big thing to be able to predict the present, like what is happening. And I look at the crypto, and it's happening." It doesn't take a genius for that one, right?
It's happening. That sounds like a politician quote there, huh?
100%.
Or more likely an analyst, one who's not really into it one way or another. It's happening. Are you long or short? Happening. You don't really know. I find that being funny, but I also know that we're still achieving institutional adoption in cryptocurrency. And so you're going to see you're going to see a lot of the good news scenarios come out, more so than the bad news scenarios, or maybe you'll see each. What I will see is that a lot of folks that are saying, I'm short crypto, I'm short crypto, I'm short crypto, they're not in crypto. They're just analyzing it on the short side. The folks that we find more of the positive information out there are doing something. They are doers in cryptocurrency. In fact, here's one that I saw. I'll just bring it up real quick, Eric. So LeBron James, Maybe you love him, maybe you hate him. I don't care. He's a big figure in sports. Most people know who he is. Did you know that the LeBron James Foundation is now getting into business with crypto.com? So LeBron James is going to become another face of crypto.com. Hey, goodbye, Matt Damon. Maybe we'll start seeing commercials with LeBron dunking a Bitcoin. What I do see is it's a good trade-off. It's a win for his foundation, but it's also a win for crypto.com, and it's also a win to bring another segment of sports viewers into cryptocurrency. So how about now, what about this poll on Benzinga that I'm hearing about, Eric?
Yeah, we have this, and I'm curious to see what you think. So what will happen first, Ethereum to 10,000 or Doge to $1? And we have the results here. Most people say that Doge is going to win that one. Thoughts?
No. I mean, I'm looking for Doge. I am looking for Doge to get to the 40 cent area. That's what I'm looking for Doge. Maybe, yeah, around 45 cents is where I think Doge is going to end up at. Hey, it could definitely go to $1. If we see Bitcoin, we see Ethereum, we see the big guys make new all-time highs, then Dogecoin could reach $1. But my money's on Ethereum reaching 10,000 first. That's my thought. What do you guys in the chat think? Do you think Ethereum is going to reach $10,000 before first, or do you think Dogecoin is going to reach $1 first? Let me know in the chat box whether you're with me here on Money Morning Live or whether you're with me here on YouTube. All right. Is it going to be Ethereum that's going to win that race, or is it going to be Doge that wins that race? Eric, what are you seeing coming in so far?
I mean, I'm seeing a lot of Ethereum, and I would have to agree with everybody too. I'm not a huge believer in Doge. You know that Ethereum has quite a bit of utility there, especially in the NFT space right now. So I think Ethereum is just going to be gaining value. It's going to just melt its way up. And
yeah,
the chat is 95% in agreement.
Yeah, and the chat is 100% Ethereum over on the YouTube channel. As we're seeing Vicky, Jay, Jesse, they're all saying Ethereum. They think Ethereum is going to outpace Doge to the goals. So, how about a strategy session? You ready to get into strategies?
Yes, I am ready to get into a strategy session. This one is going to be started out here with a question from a member that has yet to change their name. And it's about currency waves. And they ask, what MAs are used for currency waves? And Tom, I don't know much about this stuff, so I'm going to be paying attention as well.
Okay, so this is not something I spend a lot of time on staring at charts to detect. I have software that will dial down currency waves and also look at different currency waves for different currencies based on their volatility. So, for instance, currencies that have less volatility, they have a longer time. We look at longer waves. Those currencies that have a lot of volatility, we look at shorter term currency waves. So it's a pattern spotter. It's also something we call fractal waves. And so those of you that have heard the term fractal, but you're not sure what it means, it basically stands for a unique mathematical pattern. And what they do is they basically repeat themselves. And so since I'm a pattern trader and I like repeatable patterns, fractals are something that I use when I look to spot repeatable patterns. And fractals are something that exist everywhere, okay? They exist in nature. If you are at the beach, and you pick up a seashell, all right, and you see the wavy lines on the seashell. Those are fractals. And maybe you pick up a snail shell and it's got the circle on it. That pattern, that circle pattern, you can take prime numbers, and from those prime numbers, you can get Fibonacci extensions, and you can actually see those happening on a seashell, if you can believe that. That is a fractal. So definitely viewable in microcurrency markets. And so our system looks at thousands of cryptocurrencies, and we look for those fractals. We call them waves. The first one's a long-term currency wave, and it's a corrective wave. Basically moves up and down for price correction. The second one is a short-term currency wave. It's the impulse wave. So we look for corrective waves. We look for impulse waves. I call them that because that's exactly what they are. Okay, when they cross, we look to make a move. And so let me share with you a little bit of how something like this would look in the stock market, and then how we relate them to cryptocurrency. And Eric, how about I show everybody a cryptocurrency that's hitting a bullish pattern right now? Right?
I would love to see it as well. Let's go.
And there'll be a good news, bad news scenario at the end of this. So a little education, and then we'll bring up this particular pattern. So let's start back to my screen, and let's break this down to what everybody understands, which is moving averages and moving average crossovers. So for those of you that are absolutely brand new, you're very, very novice on technical analysis, let me know who you are, because it gives me an idea of how I want to start this. Okay, I can educate everybody in the room, and I can take even the simplest concept and be able to even help our experts get through the simplicity of it. So, let's talk about averages. Let's talk about patterns for a moment. Patterns can be seasonal, patterns can be technical, patterns can be fundamental. All right, let's start with fundamental. Fundamental patterns. So I look at, for instance, earnings reports, and we track earnings reports to see if we could look at earnings reports to see if a company is increasing their EPS, their earnings per share, or increasing revenues every quarter, or if their revenues are decreasing. But I go deeper than that. I actually look at price patterns before and after earnings. Right? Guess what I'm doing? I'm doing a pattern. Okay. So that's fundamental. Seasonal patterns. We do that, and we talk about the money calendar here. At least once a week, we're talking about the money calendar, and we're looking at patterns that start on a specified day and end on a specified day. But technical patterns are a little different, because you can look at technical patterns. I'm telling you, 99%, Eric, of folks that look at technical patterns are just looking at a chart, and they're going, let me put a chart up on the screen. They're looking at a chart, and they're going, wow, look at these wavy lines. Oh, the stock came down. I'm going to buy it here. Well, how can you buy it here, Eric, when it's up here?
I would agree. That is what most people do, Tom. You're right.
Yeah. I mean, they're looking at it as a lagging indicator. And they're saying, okay, wow, there's a lagging indicator. And wow, I wish I would have bought it down here when it was down at this level. But usually what people think about when it's down at this level is, oh, it's going to keep going down. Get too emotionally tied into it. Analysts will look at these type of charts. And not just this, but they could look at RSI, they could look at Bollinger, they could look at a number of different technical lines on a chart, and they'll say, "Oh, I should have bought it here, I should have bought it there." But only a true rules-based trader will look at this chart and say, "Okay, this looks nice. How many times when we hit this line, if I bought in the past, would it have worked? How many times if I hit this line and I bought, it did not work?" And you start to create a back test, and you start to see how well it worked in the past. That's what we do when we're looking for any kind of pattern. All right, so an average. An average is a group of numbers. You add them up, you divide by the number of numbers. Average. A moving average is if you use the same group of numbers every day. That average, that 5 days, the last 5 days, average. And then the new last 5 days, average, et cetera, et cetera. You can actually chart that. And that's what a moving average line is for the few of you that may not know. What you see on the screen here right now is Tesla Motors. Right? What you also see on the screen is check this out. Here is a 50-day moving average of Tesla in purple. Here is a 200-day moving average of Tesla in this brown, all right, this beige line. Those are what long-term traders use the most. Long-term investors use the 50 and the 200-day moving average. Now, what we do is we do something a little bit different. We will flex these numbers here, all right, and make them as low as 8 days to as much as 125 days on the long side. And so what our computer strategy does is it goes in there, it flexes those numbers based on each currency. And what it's doing is it's going back and looking at years of data and saying, how well did this currency do? And what are the numbers we need to look at? What is the long-term currency average? What is the short-term currency average? And so it does that with each cryptocurrency so we can get an idea of what is the best averages to use on each currency. And guess what? Those will change from time to time. But when we're going back and optimizing and looking at these, it helps us determine which ones to get in at the right precise time. So how about we go through, and I want to show you that chart. And what I do is I go into our crypto software, and I have crypto tools, and I jump into our crypto software. And by the way, I'll say it again, we're bonusing in for those of you guys that are part of our microcurrency trader, and you're thinking about upgrading to a lifetime membership. Lifetime membership means you get the publication for life. All right. And we're also putting in a crypto boot camp as part of that. But what I'm also doing that we haven't done before is we're adding a year of my crypto tools as part of that. So I ran the crypto tools today, Eric, and this is what I came up with. So this is a cryptocurrency that has had buying and selling opportunities, but it had a big major drawdown. It had a big sell that started at about 5.5 cents, and it came all the way down as low as about 2.25 cents. So 0.0225 was that low, and that was about a week ago. Since then, we've seen it move up, and we got a buy signal on it based on its own optimized cryptocurrency waves. So the cryptocurrency waves we're looking at here is giving a buy right here around the 5 cent level, right about 5 cents. What is this cryptocurrency, you may ask? It's called Quant Stamp, right? The actual symbol is QSP. Now, that's the good news. You want the bad news, Eric?
Give it to me.
Doesn't trade on Coinbase, so I can't trade it. But if you're out there trading something else, you might want to have a look at it and see if it looks right for you. Okay, so that's my my cryptocurrency that I wanted to share with everybody today. Again, not a Coinbase one, not one that we're sending out alerts to with our microcurrency group, because it's not one of the biggest currencies out there. But I wanted to share it with everybody because it met the rules of our strategy session today. So there you go, Eric. And that's our strategy session for today.
That was a great strategy session. I'm going to get our timer out of here, and which means we're going to move on to some question and answers. And I have 4 questions prepackaged, ready to go. And then I'm going to actually dive into the chat and see what kind of questions people are having right now. But let's move on over. And the first one that we have is actually on Cardano, and we have member asking, I'm not in ADA Cardano, should I get some? This is my first purchase aside from Bitcoin and Ethereum. So I guess, Tom, what we're asking here is, do you believe in the Cardano?
I do. I have a lot of zeros behind a number to give you an idea of how much I believe in the Cardano. And so but let's put the chart up once again for our member 0568. And this is one. First, get a name. Okay, let's say that. Get a name. I love talking to people by names and not member numbers. But that being said, if you're just now looking at Cardano, man, I mean, you're looking at a fantastic price, because Eric, I own it just above 2. That's where I have it.
Yeah.
And I like it at 2.
This is a better price than I got it at. I'm trying to get back. So good price, for sure.
So we had just, we had talked about this last week. We had talked about Cardano last week when it was trading down here near $1. It's still trading down near $1. In fact, let me go one more step, and let's pop on over and look at, instead of Bitcoin price, let me type in ADA and see if I can find ADA on the list here. Can I find ADA on the list? It's not going to let me. I'm not logged in. Nope. I gotta log in. But ADA. Well, you know what we'll do? We'll go over to my charts and look at ADA, and I'll bring up the most recent price of it. I know I can get it here somewhere without spending too much time on it. But ADA, oh, come on. There we go. Okay. $1.05 right now. So it has gotten a little bit more expensive about 5% more expensive since earlier this morning, but still fantastic, fantastic price down there. And then the great thing about owning it at $1, and this is just, again, my opinion, is I like to, at very least, as a trader of some of the smaller currencies, sell half of it off when it doubles in value. I mean, if I get it when, there's some folks out there that are buying it and saying, I'm not selling half of it until it hits 1,000%. I'm with you. I get you. But if you sell half of it off when it doubles in value, you take your money and you put it back in your pocket, which you could use for something else. All right. Now, you know what you've also done? You've taken complete emotion out of the trade, because I don't care whether you're seasonal, fundamental, technical, you read the tea leaves, you look at stars, 4-leaf clovers, whatever. I don't care how you find your technical analysis. When you put your money on the line, you are making an emotional decision, because what it does is it affects your future to some more or some less degree. Wouldn't you think so, Eric?
Yeah, I agree 100%. When your money's on the line, you have an attachment to that, especially if it's money that you just can't throw away, for sure.
Yeah, so if you take half off, if you buy something for $1 and you take half of it back for $2, you're taking your original investment back. Now you're playing with somebody else's money, or at least you can convince your mind of that, because it is your money. You doubled it, but if you can convince your mind that you've taken that, you've now got somebody else's money that's working for you. It feels a lot better.
Well, you're playing at the table for free right then. So wherever that asset goes to, you have your money back in your pocket. It's a great position to be in. I like it.
Yeah. Yep.
Let's move on to the next question. And it's a quick yes or no for you here. And it's about Solana. What's your opinion on Solana? I know that the asset does well, but do you like it, Tom? How do you look at it?
My opinion is don't know, don't care. and Vic might be thinking, what? You're the pattern trader. I need to know what you think. As an actual coin itself, I don't think. Outside of, say, Bitcoin, Ethereum, Polkadot, Cardano, and maybe one or two more, I don't think about it. There are thousands of these things out there. And what I do is I strip it down to maybe about the top 100. And when you look at the top 100 by market cap, you know who's at the top. Bitcoin. You know who's right behind it. Ethereum. Then there's a few more. And then there's stuff out there that I just simply do not look at. I let my artificial intelligence tell me when it's time to look at it. Right now, I have got no opinion on Solana, Eric.
All right, that's fair enough. Well, let's move on to the next question then. And sometimes you just got to look at the charts and follow what they tell you. But I like this question because this is something that we don't typically talk about and people may not understand. And it's about market cap. It's from Teresa and Mike. Tom, when picking a coin, do you factor in the market cap of that coin?
Teresa and Mike, I see you guys, just like Vic, I see you guys all the time on here. Thanks for hanging out with us. So I absolutely do, okay? Because market cap to me is a byproduct of volume and liquidity. Okay. And think about this. Liquidity to me as a trader. I mean, it's not as important as an investor. It's important, but liquidity is not as important to an investor as it is a trader. So if I'm going in and I'm trading cryptocurrencies, liquidity is a big, big thing for me. And one way we can look at liquidity, as an option trader, we look at liquidity between the bid and the ask. When it's cryptocurrencies, you can look at the bid and the ask, but it's going to spin your head because, for instance, let's look at Bitcoin right now. You see over here, see the order book in market trades? The bid and the ask price are changing all the time. I mean, you could actually get a headache looking at this area right here. Let me pull it on the screen for you. So here's your bid right now on BTC. Here's your offer on BTC, and I've got my size. But you can see this kind of moving back and forth like crazy. It's just all over the place, okay? This is blinking quite a bit. It's like traffic lights in New York City. Instead of that, what we could also do is slow it down a bit. Slow it down a bit by looking at something like CoinMarketCap. So CoinMarketCap.com is a great place you can go to find market caps. And so, do I factor this in? Absolutely. How do I factor it in? This is a way we can all factor our coins in. If you look at coin market cap, it's going to show you by market capitalization. This is how this particular site ranks. It's their default setting. So Bitcoin, 725 billion, right? Not, it'll be back to the trillion again sooner, I hope. But then take a look at Ethereum. That's number 2 on the market cap, where it's now at 320 billion. I remember, Eric, when Bitcoin was so much more. I mean, it represented 90%, not too long ago, of the market cap out there. When you looked at you looked at maybe the top 10, not so much anymore.
There's a lot more now. There's a lot more out here now as well, Tom.
There is. I mean, Ethereum had been out there, and you can see that between the two of them, we're talking about, we're talking about $1 trillion market cap. But we'll see a $1 trillion market cap on Bitcoin real soon. And in order for Ethereum to hit the $1 trillion market cap, we want to see Ethereum at around $7,000 to $7,500 in coin. And then you'll hear the news. And that's going to be a big news event. You're going to hear it on mainstream media. Ethereum just hit the $1 trillion market cap, right? Keep that in mind. That may be the time where, as traders and maybe as investors, maybe we pull a little off the table. Because again, this is a big buy the rumor, sell the news. The sell the news events have happened much more than not. The big sell the news events, Eric, that happened just 3 months ago were all the ETFs that were coming on board. That was when we hit our highs, right? End of October, the first ETF came on. Beginning November, we had a couple more popping in, and that was our highs on Bitcoin and Ethereum. We'll know soon enough as we come through what the next big headline events are going to be that are going to drive these to new all-time highs. But I'm telling you, one of them is going to be Bitcoin maybe hitting 3 trillion in market value on its own, and Ethereum hitting 1 trillion. But you look down here, you can see Tether's on here. There's Binance Coin at 63 billion. You got a couple, we got a couple of stables, like Tether, USD. There's Cardano in the 6th position. Even at $1.06, this thing still has huge market cap. Solana, yeah, it's on there. We'll skip it. Ripple's on there too. Even though Ripple's not part of Coinbase anymore, it still has a pretty healthy market cap. And let me get this straight. All right. You may love Solana. You may hate Solana. I trade Solana. If Solana gives me a buy, I'm going to buy it. Now, I see that buy right there. That doesn't mean I've got a buy signal. That just means that Coin Market Cap says you can buy it through them. All right. Through some of their counterparts. So does that answer the question, Eric?
Yeah, Tom, it does. And why don't I take us into our final question that we have ready to go? And I think I already know the answer based on the answer to one of your previous questions, but Hive blockchain stock. Steve-O wants to know, do you like Hive, Tom?
Yeah, again, Hive is not in my investing, is my long term. So I can't say that I like it. But would I trade it? Absolutely. All right. Let me reiterate again what makes a trade a tradable coin for me. It has to be in that, that large market cap. It's got to be in the market cap of, I'd say, the top 100 coins are what I'm looking at on the tradable side. Number one. Number two, we look at an overview of it. Where has it been? Low to high to pullback. All right. That's when we look at that long-term Fibonacci view. Number three, we look at where is it in the currency wave trading strategy. All right. Do we have short-term currency waves crossing above long-term currency waves? If we do, it becomes a buying opportunity. And number four, and we'll talk about this maybe next week or the next week or two, we'll talk about, and I've done it before, our darknet trading strategy, which really looks at these long, short, and intermediate term channels. And we look for triple stack compressions. And so what I do for Steve-O and the rest of the group out there is for me to get a hit where all of a sudden I'm ready to make a buy, I'm ready to have an alert go out to our microcurrency members, it has to layer over a couple of those trading strategies. I can't just have one. All right. I've got to have some basing going on. I have to have maybe a currency wave system. I've got to be seeing Fibonacci that's holding in a particular area, and or I've got to have a darknet signal. And that's how I pick them. That's how we trade cryptocurrencies here with Microcurrency Trader.
Thanks, Tom. Well, we do have a question I just grabbed from the chat, which I'd love for you to touch on. I'm going to actually expand on a little bit, and it's from Eddie62. What are your thoughts on the eToro platform? But even beyond that, I know that you're specifically a Coinbase user or Coinbase Pro. How do you feel about other platforms, and why do you primarily stick to Coinbase Pro rather than using a whole bunch of different platforms, I guess?
You know what? I've learned in the stock market, I've learned in options, I've learned in a lot of investments. If you're going into an area where you're going to invest in something, okay? One of my rules is if it's a publicly traded company, you can see how well it's doing. All right. I'm trying to remember back the last section where we saw major problems and major fallouts from people crowding into something. I think it was FX. I think it was the Forex markets. The Forex markets are a list of dealers, hundreds and hundreds, if not thousands of dealers around the world. Right. So Forex markets are not something you can trade. You could trade the Forex markets in a few areas, but it never really took off where all of a sudden Charles Schwab was letting you trade Forex and Robinhood and Thinkorswim. But there were a couple of dealers that were based on publicly traded companies. I think I remember Man Financial did a lot of Forex stuff, and their stock price started dropping like crazy. And so what ended up happening was people knew something was going on with this company, and they were able to convert the smart ones were able to convert their Forex back to fiat currency, back to their original fiat currency, pull it out of Man before ultimately the news coming out that Man was filing for bankruptcy. And so this was true in the Forex markets. Now let's fast forward to cryptocurrency. Okay, why do I use Coinbase? They're a publicly traded firm. All right, their stock is $300 plus per share. So I know the company is viable. All right, you could trade kind of that fake cryptocurrency in Robinhood right now. Maybe one day they'll come true to their word and they'll have cryptocurrency wallets, and you'll be able to trade cryptocurrency through them. The problem is when you're with a private company. Remember Mt. Gox? Remember that area? It was a place to hold cryptocurrency. Well, Mt. Gox all of a sudden they took a big hit, all right, and all of a sudden a lot of crypto that you thought you were holding in there disappeared. If you had your money into something that was a publicly traded firm, like for instance, if I'm holding crypto in Coinbase, which I am, all right, one of the places I'm holding, and Coinbase started dropping, and it was down. All of a sudden now it's a $10 stock. You know what I'm doing with my Bitcoin in Coinbase, Eric?
What are you doing?
I'm putting it on one of these.
Smart.
I'm putting it on this guy, and I'm getting it off of Coinbase, because if they're going so low that there could be a bankruptcy issue, I want to make sure I have my crypto out. So that's why. That's the reason why I'm a little, things are a little sketchy if you go out and look at some of these areas. And let me add one more thing. I see, some of these areas you can stake. All right, these staking, these places you can stake stuff. You're a staker, aren't you, Eric?
I am, Tom. I stake a couple of my assets. Cardano is one of them. Yep.
Where do you stake at?
All different places. I stake on the Daedalus wallet for Cardano, which is on my desktop. So it's nice and safe. It's better than being on a platform, of course. Yeah.
Right. Yeah. What do you feel about Celsius?
I haven't used Celsius. I use two other staking platforms, both on my phone. I use the, Cosmos Station, and I use the Algorand wallet. And those are the three things that I stake: Fetch, Algorand, and Cardano. I don't use the other. I'm also in New York, so I'm limited.
Yeah. There's the regulators that keep you from doing things there. But would you agree that some of these places, when you see 65% in a year that you can make on a certain currency, that it's a little too good to be true, and you got to wonder, if I put my money there, is there a good chance that it could disappear in the short term?
I mean,
don't you think of that?
Yeah, of course. And I got you beat on that one, Tom. We got one that's the new Looks Rare token where you were getting 600% yearly on the token, which is insane. It's a new NFT service. It's going down every day, and I think that staking rate is going to be going away in about a week and a half. But yeah, you got to think about it, is how realistic when you could make a day's pay just from staking your assets there.
Yeah.
It's definitely
Yep.
something to look into for sure.
It sounds like a pyramid scheme to me if it's too good to be true.
Could
Hey,
be.
we are almost out of time.
Yeah.
So I want to talk about, well, I shared with everybody a cryptocurrency that you could not buy on Coinbase. But you know what? Let's talk about our top picks for today. I'm looking
Sure.
at, and this is not a cryptocurrency, but this is a cryptocurrency stock, and it was MasterCard. I brought it up at the beginning of the show. It's hitting new highs for the year. As you know, in most cases, when stocks go up, their volatility goes down. So at the money calls look really good on this one with the, if you're going out to that 60-day realm, and even slightly out of the money call spreads I like on that too, with expiration dates in the 30-60-day range. How about you, Eric? What do you got on your radar as far as something you like today?
Yeah, I'm going to actually take you over to my charts right over here. And this is just live coin watch where I just keep an eye on some coins that I like. And if you look at the charts, there's one asset right here that on the 7-day is down 15.5%. I'm talking about Cosmos. And this asset I feel is gonna pop. I mean, it was just at 44 bucks about a week and a half ago. Obviously everything dipped, but it's the only asset of everything that I'm watching, and it's a protocol layer asset as well, that is down right now for the 7-day. Everything else is green. I feel like if you're looking to make a quick buck, that may be a good option, but I like to look back on the 30-day for some really good opportunities. So as I scroll down, I'm going to see two. One of them is right here. I'm looking at Fetch. It's down 38%. That's one of the assets that I have staked. And the other one, Algorand, 42, almost 43%. It's down over the 30-day. Now, if we compare that to your two favorite assets, Bitcoin and Ethereum, it's down 10 to 20% beyond those. So I think those are two good assets to take a look at, those protocol layer ones that you may not mind holding on to for a little bit longer. It's my 2 cents.
Awesome. Thank you so much, Eric. And you know what? As we roll out of here, I see Bitcoin at highs that we're looks like we're trying to take out those highs from last week, from that big push up off the low. Looks like we've already kind of moved higher from the weekend in both Bitcoin and also in Ethereum. You will never hear me talk about Shiba Inu on this program. So any of you are asking about the SHIB, not gonna happen. And anyway, guys, thanks for joining me today. For all of you that are premium subscribers, I am taking a break from my 1 o'clock today. So you get a break too, but I will pick that back up again next week for everybody. I'll see you here, same time, same channel tomorrow. We'll see you all then. Bye, everyone.